market closing at just above that 20,000 mark. It seems that the 20,000 level appears to be quite a magnetic level. The market really not moving anywhere below it. And when it does, we see a dip back above that level.
Well, like you rightly said, it's more like a continuation of the bearish trend we've seen throughout the year. And going into the season, the Yuletide season, traditionally, what we expect to see are sell-offs, which could further depress the market. So across the breadth of it, one would expect that the same pattern would hold through into the early part of next year. But I'm more interested, I must tell you, in watching the underlying currents at this time. Agreed, the bearish trend, the bearish run is projected to continue for some time to come. But let's take a look at one thing I find most interesting. Looking back into October, the highly traded, top 3 traded subsectors, so to speak, traditionally the financial services, oil and gas, and from time to time a few others. But from the middle of November, you would have noticed that consumer goods has given a strong showing, coming in maybe a distant second, but a consistent second among the top trades of the day. Now that's instructive. You know, if you look at it critically, I mean, the crisis has been, it's unprecedented in our history, so to speak. But again, it shows a change in investor patterns in the country, in my opinion. Yeah. I mean, here you have investors looking more at value, so to speak. Take a look at the
and
stocks
also,
like UAC.
Also considered more defensive sector in Nigeria.
Sorry, I didn't get that.
The consumer goods sector considered a defensive sector, given the fact of how the economy is growing and the fact that demand for those type of products is not going to go anywhere and only set to rise.
Precisely, and again, one thing that that sector has going for it is the low elasticity of demand. It's sort of insulated their revenues over time. So to a large extent, I expect to see that trend sustained. Again, if you look at it, if you tie it into what the ongoings in the economy, the restructuring, particularly the medium-term fiscal, I know I'm moving into something else here, but it's good to look at it in context. We're looking at a country that's talking about investment in infrastructure. We're looking at focus on manufacturing. Now, if these things hold through into Q1, one would expect that this kind of trend would continue because these companies are not likely going to expand capacity. A number of them are looking at, have already entered into structured partnerships with some foreign companies to boost the technical base in production, particularly. So I think if we get through the restructuring in the polity, particularly in the area of infrastructure and power in particular, we should expect to see this kind of trend go through. And again, the stock market itself is going through a lot of restructuring. Most of it may not be making the headlines. For example, yesterday, the coordinating minister for the economy spoke about a bailout for stockbrokers. The parliament is looking at getting major telecom companies to list on the exchange. So
well, that of course is a hugely contentious issue, because if we do get the major telecoms companies to list, we'll be able to double the market cap of where it sits at the moment, at this point in time. I mean, MTN, for example, of course being the largest telecoms player, has said in its statements before that it will list, but it hasn't to date. Why isn't government now coming out and being more aggressive in terms of getting them to list?
Now, it's true, but the point I'm making here is that to the extent that the idea has been broached, one would expect to see some back and forth negotiations as to the details of it. But one thing is clear. We should see, right now what you see is the equities market dominating the capital market of the country. So one would expect to see that as we go on, I mean, with this kind of reforms here and there, muted tones about some other reforms in the pipeline, once we're able to get a much deeper market, then we should see the pattern change. And I don't expect that overbearing dominance of the financial sector in the medium term.
So that focus in terms of where the majority of trade is taking place is definitely changing there. Just very quickly touching on the 2012 budget, that a big focus right now. What is the type of discourse that you see taking place in terms of how it's going to shape a fiscal policy going into next year and the type of the key implications that will have for the capital market?
Well, let's look at it this way. We're looking at a budget, okay? The ongoing discussions within the framework of the MTF, as I mentioned, talking about cutting the deficit and essentially looking at increasing investments in the country. Now, I think, to a large extent, what we would expect to see is that we will see the investment pattern grow. I want to be specific now, talk about construction. The government has spoken about increasing capital expenditure, but also boosting the preponderance of PPPs, private sector partnerships. Okay, recurrent expenditure would go down from the strategy paper in place. So what we would expect to see is a more productive economy. I highlighted in an earlier discussion, we're looking at two major issues that will shape the debate in the coming weeks. The issue of the cutting down overheads and the recurrent expenditure, particularly on the side of the legislature, and then the issue of the removal of fuel subsidy. Contentious as they may be, and one would expect that, considering our past, we have a history of having gone through this road before, where you have the political will to drive through reforms, and you have professionals that are committed to executing on the agenda. So what I expect to see is that if we use those two issues as a bellwether to gauge the direction of the economy, and those assumptions hold true, we should see a ripple effect on the capital market. Yeah. Because that's what investors will be looking at.